Anthropic, the powerhouse behind the Claude AI models, just confidentially filed for an IPO. And the numbers driving this are, well, they're absolutely staggering. We're talking a $965 billion private valuation following their May 2026 funding round. But here's the catch, and it's a big one. Right now, those shares are locked up tight, strictly reserved for accredited investors. So if you're a retail investor, you're essentially locked out of the direct auction. But don't click away just yet, because the story definitely doesn't end there. Two of the biggest tech companies in the world already have massive, real exposure to Anthropic, and their stock, you can buy that on the public markets today. Okay, let's dive into this. Because this number right here is where everything starts. $965 billion. That's the private valuation from their latest funding round in May of 2026. Keep in mind, this isn't some pie-in-the-sky speculative future valuation. This is the actual price tag institutional money has already slapped on the company before it even goes public. It really sets the stage for what could easily be one of the most highly anticipated market debuts we've seen in recent history. But as it stands right now, the market is basically split into two camps. On one side, you've got accredited investors. These are the massive institutions and high net worth individuals who actually get to hold direct shares of Anthropic while it's still a private entity. And on the other side, well, that's everyone else. For the vast majority of us looking to get a piece of that $965 billion pie, we need indirect pathways. And as you'll see, those indirect pathways are currently dominated by two very familiar public tech giants. So, moving on to Section 1, the S-1 filing and business fundamentals. Back on June 1st, 2026, Anthropic took its very first formal step toward the public markets by confidentially filing its Form S-1 with the SEC. And the sheer scale of their operations, it's mind-blowing. By May 2026, their run rate revenue crossed an incredible $47 billion. They have literally maintained a 10x revenue growth pace for 3 consecutive years. And they aren't just selling to anyone. They have over 1,000 enterprise customers paying more than $1 million a year, including 8 of the Fortune 10. Now, they actually aren't expected to turn cash flow positive until late 2028. But, and this brilliantly illustrates the point, that sheer momentum in enterprise adoption is exactly what is driving that massive valuation. Now, because that S-1 filing was confidential, we actually do not have an official finalized date for the IPO. The timeline you're looking at here is purely based on rumors. I really want to be extremely explicit about this. The September Investor Roadshow and the potential October market debut are strictly rumored and completely unconfirmed. The whole IPO process is highly regulated and constantly subject to change, so please treat these dates as speculative industry chatter, not hard facts. Of course, the market absolutely loves to speculate, right? Prediction markets are actively trying to price in the exact timing of all this. Currently, Kalshi is showing about a 57% likelihood of an IPO announcement before November 1st, while Polymarket shows roughly a 76% chance of the IPO happening before the end of the year. But again, look at these numbers strictly as a measure of market sentiment and speculative betting odds. They are absolutely not guaranteed factual dates. It's really just a reflection of how eager everyone is for this event. Now, before we get to the primary indirect routes, I should probably mention there is one other highly specific exception for retail investors. It's the KraneShares AI and Technology ETF, ticker symbol AGIX. This fund actually holds about 1.65% of its net assets directly in Anthropic. Pretty cool, right? But there's a catch. As noted in the filings, it carries a 1% expense ratio, which is comparatively pretty steep for an ETF. So while it does offer a direct holding, you're definitely paying a premium for it. All right, let's get into Section 2, Amazon's AWS infrastructure play. This brings us to the very first major pathway for indirect exposure. And honestly, it is a colossal one. Amazon. Let's break down the sheer size of their position here. Amazon has already poured roughly $13 billion into Anthropic. That gives them an estimated 15 to 21% ownership stake. And this didn't just happen overnight. They committed $4 billion across 2023 and 2024, another $4 billion in November of 2024, and then casually dropped another $5 billion in April of 2026. Plus, on top of all that, Amazon has pledged up to $20 billion more, which is going to be released in conditional tranches tied to very specific commercial milestones. Now, what's really interesting about this slide is this isn't just a one-way street. In return for Amazon's massive capital injection, look at how the money flows right back. Anthropic has committed to spending more than $100 billion over the next decade on Amazon's AWS cloud infrastructure. They've essentially named AWS their primary training and deployment partner. That is a monumental multi-year revenue commitment flowing straight back into Amazon's own ecosystem. And that $100 billion commitment, it is feeding an absolute beast. Look at Q1 2026. AWS accounted for 21% of Amazon's total net sales, but the growth is what's really crazy, 28% year over year. That's the fastest growth AWS has seen in 15 quarters, pushing it to a staggering $150 billion annualized run rate. Just to support this massive AI demand from partners like Anthropic, Amazon's capital spending hit $43.2 billion in that quarter alone. So Amazon's exposure here is fundamentally a massive infrastructure play. Next up, Section 3, Alphabet's diversified TPU stake. So, Alphabet also holds a massive piece of this pie, but their relationship is actually structured quite differently from Amazon's. Alphabet commands an estimated 14 to 15% stake in Anthropic, which carries an implied value of roughly $135 billion at today's private valuations. They've made over $13 billion in total previous commitments. But then, in April 2026, things got even wilder. They introduced a newer conditional commitment of up to $40 billion in cash and compute. That breaks down to $10 billion upfront and up to $30 billion tied to performance targets. Add it all up, and Alphabet's total reported exposure to Anthropic could exceed an astonishing $43 billion. But remember, just like with Amazon, Alphabet requires something in return, and this is a huge strategic play for them. Anthropic has committed to utilizing 5 gigawatts of next-generation TPU capacity, those are tensor processing units, through Google and Broadcom starting in 2027. That guarantees Anthropic access to up to 1 million TPU chips. What you really need to take away from this is that it gives Anthropic a critical hardware path that isn't entirely dependent on NVIDIA. It effectively turns Alphabet into a major AI hardware provider. So the crucial point is how this private stake actually impacts Alphabet's public bottom line right now. In Q1 of 2026, Alphabet reported $62.6 billion in net income, which is up 81% year over year. And a massive driver of that, $37.7 billion in unrealized gains on non-marketable equity securities. Now, they didn't break out Anthropic's exact contribution to that specific figure, but it brilliantly illustrates how rising private AI valuations through Alphabet's venture arms, like Capital G and GV, can meaningfully boost their public earnings way before an IPO even happens. All right, moving on to Section 4, the reality check. Before anyone runs out and gets overly excited about buying into these tech giants solely for the Anthropic exposure, we really need to do a strict reality check on what this actually means for your portfolio. Let's put these two strategies side by side. On the left, Amazon is playing a pure infrastructure game. Their investment secures a massive $100 billion cloud commitment that feeds directly into AWS. On the right, Alphabet is playing a highly diversified game. It's a unique blend of a direct equity stake, immense venture capital engine gains, and custom TPU chip demand. As you can see, they are two very different mechanical approaches to capturing the upside of Anthropic's growth. But honestly, here is the absolutely most important takeaway of this entire explainer. Neither of these companies is a direct substitute for owning Anthropic shares. Amazon and Alphabet are sprawling, globally diversified giants. Anthropic is just one single, albeit incredibly exciting, piece of their much larger business models. So buying their stock exposes you to their entire corporate ecosystem, right? Not just the performance of their Anthropic holdings. Therefore, I want to make this perfectly clear. This explainer is strictly for informational and educational purposes only. This is not investment advice. It is absolutely not a recommendation to buy Amazon, Alphabet, or any related security. Please always do your own independent research, and I highly encourage you to consult a licensed financial advisor before making any investment decisions whatsoever. We've seen exactly how both of these tech titans have maneuvered to secure their piece of a $965 billion AI powerhouse before the public ever gets a chance. But I really want to hear from you. If Anthropic does go public later this year, which of these two strategies do you think will ultimately benefit more? Is it Amazon's $100 billion AWS infrastructure bet or Alphabet's highly diversified TPU and equity stake? Let me know your thoughts down in the comments.